Very stellar moves coming in on Wall Street. There is no stopping for some of those indices on Wall Street. In US stock futures, let's talk about that first. They were slightly higher yesterday after the Dow Jones Industrial Average is closed at another record high. Earlier in the day, the Dow advanced 0.5% to a record close. The 30 stock index also hit an all-time high during the session. The S&P 500 also added 0.3%, while the Nasdaq gained 0.4%. Investors bet that the unsuccessful assassination attempt on former President Donald Trump would be a tailwind for the Republican presidential candidate and his party in November's election. Now, a victory for the GOP at the polls could have been the way for favorable tax and fiscal policies for investors. The markets also continued its rotation into small cap stocks, with the Russell 2000 rising 1.8% during yesterday's session. So the small cap index on Wall Street was the one to watch out for yesterday as well. Nvidia was the biggest gainer for both the S&P 500 and the Nasdaq during yesterday's trading session. On the flip side, you did have Meta Platforms that was the biggest laggard for both of these indices. Now on the earnings front, you have Bank of America, Morgan Stanley, United Health, as well as Charles Schwab all set to report their earnings before the opening bell on today's trading session US time. Traders will also watch for the latest economic data, which includes June's retail sales, an important metric, so watch out for that, and export and import price indices, as well as May's business inventories. So while that was on the US Wall Street, let's also take a look at what the bonds are up to, because the 10-year Treasury yield has inched higher as traders assessed Fed Chair Jerome Powell's comments, and we'll take you through that a little later in the show as well. But on the back of that, US 10-year at 4.213%, slightly higher, though seems to have cooled off nominally as of now. So while that's on the equity and also on the bond side, let's also take a look at what the European markets are up to. And like you could see, green all across Wall Street. It's the exact opposite of that. It's only red across European markets this morning. You have DAX that closed lower by 0.8%, FTSE also 0.8% lower, and the Stock 600 has closed a whole 1% lower. Lots of pressure coming in on European stocks, so we'll just wait and see how that market pans out. But other than that, the US markets and the US handover looking largely positive, and US VIX also is up 5.3%, so that's something to watch out for. But other than that, no complaints coming in from the US, a very positive handover coming in from the US at least. But with that, Shreyanshi, also take us through what commodities are up to.
Well, absolutely, and can't say no complaints for oil, because what you see with oil prices is that they fell for a second day on Monday as the dollar gained ground amid political uncertainty in the US following an attack on US presidential candidate Donald Trump, while investors also eyed the progress of talks for a Gaza ceasefire. So when you take a look at price movements, then you're looking at Brent with a downtick of about 14 cents or 0.2% thereabout, and $81 a barrel levels coming in for Brent after settling down 37 cents on Friday. Now let's also take a look at US WTI then. That was around those $81 a barrel levels, and that also saw a downtick of 25 cents coming in, or about 0.3% thereabout, and the dollar firmed on Monday, while US bond futures slipped as investors wagered the attack on Trump made his victory in the upcoming presidential election more likely. So that is also something that the market is looking at, but a stronger dollar tends to lower prices as buyers using other currencies have to pay for their dollar-denominated crude. Now, in terms of weakness that we saw last week, Brent fell more than 1.7% after 4 weeks of gains, while WTI futures also slid 1.1%. As weak oil demand in China, the world's top importer, countered robust summer consumption in the US. So that is something that the market is also keeping an eye on. And China's crude oil imports fell 2.3% in the first half of this year to about 11 million barrels per day amid disappointing fuel demand, and as independent refiners reduced production due to weak profit margins as well. So China's demand picture is also something that the market is keeping a close eye on. And in terms of other factors to watch out for in terms of the oil market, you do have in the Middle East talks on ending the Gaza conflict between Israel and Hamas that halted on Saturday after 3 days, and the uncertainty around the volatile situation still has kept the geopolitical risk premium in oil elevated. Now, despite all of this, oil markets are broadly underpinned by supply cuts from OPEC+, with Iraq's oil ministry saying that it will be compensating for any oil overproduction since the beginning of 2024. So So that is largely the picture coming in when you take a look at oil prices. Let's also take a look at gold, because gold prices gained on Monday, hovering near a more than 1 month high hit last week, aided by hopes for interest rate cuts from the Federal Reserve, as traders await more comments from Fed officials to gauge the timing of those cuts as well. So when you're looking at price levels coming in for gold, spot gold rose nearly 0.5% thereabout and was around those $2,400 per ounce levels. Now mind you, non-yielding bullion's appeal tends to shine in a lower interest rate environment. So chance of a US rate cut in September is really what the gold market is looking out for. But despite that, currently what we saw is gold hovering near a more than 1 month high. So those are the levels that we're looking at, Steve.
Absolutely.
If you like this video, then like, share and subscribe to ET Now.